Ladies and gentlemen, Greg Mikulowski from ForexLive.com. On Friday, I did a video on the sterling versus yen. It's been trending to the upside, and in the process, we've been moving steadily higher in that currency pair. Another thing that we've been doing is holding support against a key technical moving average, which I outlined in that video last week. I'm going to do a follow-up to that video, see where we stand today after a corrective move lower in the pair earlier today. So let's get started. This is the actually the monthly chart of the sterling versus yen, and you can see that over the last 7 months we've seen a steady move to the upside, up. 7 straight months to the upside, and in the process the price moved back above the 61.8% retracement of this move to the downside at 199.808. That was done four weeks ago. We first breached that level, but it wasn't until a couple weeks ago that the price closed above it. And again, last week and this week we're moving even higher. So the upside remains the way to go for this pair. But when you have these sharp moves to the upside and trend type moves, you always wonder when is it going to end. Are there little signs that the price is overbought and we stand to have a corrective move? And in order to figure that out, I like to bring things in. And in this case, we looked at the hourly chart. Why the hourly chart? Well, if you go back in time and you take a look at this blue line right here, the price had on Friday, we held support against that blue line on 1, 2, 3 separate occasions. And in trading here today, what do? We came down to that blue line here once again. We moved a little bit below it, admittedly, but the price then rebounded to the upside, and what you can see, we've extended to a new session high again for this currency pair. So the sellers had their shot here, and they missed, and the price started to move back higher. Now, admittedly, if you go back in time to this day right here, the price also moved below that level and rebounded back to the upside. In this case, an hourly bar, it looks like it closed below that level before moving higher. Over here, we held the 100 bar moving average. This one we fell, here we held it as well. This one we fell below that level, but we also held the 200-hour moving average. And similarly, we found support against the 200-hour moving average here after breaking below the 100-hour moving average back here, where things really started to go higher in the near term at least. Again, this is the hourly chart, so each of these dashed lines represents a day. So this is the most recent moves to the upside for this currency pair. So there is a history with the 100-hour moving average, and that level was going to be a key level today, and it remains a key level going forward. We need to get and stay below that 100-hour moving average to show that the sellers mean business to the downside. Absent that, and I wouldn't call today's dip in the Asian session to be much of a proof that the sellers really wanted to take control. If anything, it showed that the sellers could not keep control, and the buyers were licking their chops and looking at that opportunity to buy. So until the price can get below this 100-hour moving average, to stay below that level, and then below the 200-hour moving average as well. Remember, we found a support against it here and here in our recent history in this pair. The sellers aren't really winning. They're just making a little bit of play, correcting a little bit lower, but the buyers are there waiting to snap it up and take the pair higher. So watch the 100-hour moving average. Continue to watch that at 205.597. It's moving higher, and that will give you clues for this currency pair. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.